Hi guys, good evening and welcome back. What a painful bloodbath in our Indian market today. So entire D Street is flooded with blood today, guys. So such an crash in our market, whatever we call. Is it a buy? Is it a time to buy? Is it the time to exit? Is it the time to hold? What is, guys? So just keep calm down. I'll explain in detail each and everything, each and every technical reasons and each and every logical reasons. I'll explain you guys, so you don't have to be worry about it. If you are a long-term investor, definitely be calm, be calm, be calm. Nothing, be calm and simply watch this video. You will get a clear understanding of today's market crash. Each and everything. There are five major reasons. So we will try to analyze those five major reasons, and we will try to understand the reason for our Indian market crash, and also we will try to analyze till how long it can be there in our Indian market. Before going to that, let me give a disclaimer that the content we are discussing is only for educational purpose. It is not a buy or sell recommendation, guys. Without any further delay, directly let us jump into the market. So today, if you look at our Nifty 50 market, it has been close 2.68% down, guys. So as we expected in the morning video, we saw that GIF Nifty was indicating a major gap down opening. As expected, it opened gap down. So continuously it was going down, guys. Going down, going down, going down. 662 points down today. So in the history of Indian market, so today is also one of the day it has added to that history of crash days. So this is also a crash. We will try to analyze the reason behind that crash and all. So and also quickly, let us take a look into the broad market indices and sectoral indices, guys. So if you look at Nifty 50 2.68% down, Nifty next 50 is 3.26% down, Nifty 100 is 2.83% down, Nifty 500 is 3.08% down, Nifty mid cap 50 is 3.28% down, Nifty mid cap 100 is 3.55% down, Nifty small cap is 4.57% down, and Nifty VIX, we have to talk about this. 42%, 42 points up today. So then comes Nifty micro cap. Today it has closed 4.49% down, guys. If you compare today all the sectoral broad market indices, large cap has crashed very less compared to the mid cap and small cap. Large cap has crashed almost 2.2%, 2.5% like that, but mid cap and small cap has crashed more than 3%, 4% respectively. So then quickly take a look into the sectoral indices. Nifty Bank is 2.44% down, Nifty Auto 3.92% down, Nifty Financial Services 2.58% down, Nifty FMCG 0.32% down, and Nifty IT is 3.26% down, Nifty Metal is 4.85% down, Nifty Media 4.58% down, and Nifty PSU Bank 4.09% down, Nifty Healthcare Index 1.66% down, Nifty Consumer Durables 2.86% down, Nifty Oil and Gas 3.71%, guys. If you look at the sectoral indices, media and metal have crashed a lot, almost 5%, guys, almost 5%. But when it comes to FMCG, just 0.32% down. So whenever the crash happens, whenever the some uncertainties happens in the market, definitely the only one sector which goes up or which corrects very less is the defensive sector. That is none other than FMCG sector. Consumer durables and discretionary items are going to perform well. That is what we have seen in the past as well. That is what we have seen in the history as well. Whenever the market crashes, one sector which may go up or which may correct very less is defensive sector, that is FMCG. As per the rules of the market, it has performed, guys. So that is what we can see it clearly. And quickly, take a look at the Nikkei index. So this is one of the major reason for today's corrections. So this Japan decision, Japan interest rate hiking is a major decision. We will try to analyze that too as well. So what is carry trade and all. So before going to that, quickly see the Nikkei index. So it has corrected 12% in a single day, guys. If you look at 5-day performance, 17%. If you look at 1 year performance, minus 2.47%, guys. It has given a very good rally, but in the past few days it has lost all the gains which has made in the last 1 year. Just within 4 5 days, it has lost all the gains which has made in the last 1 year. 1 year performance. So let us quickly see this 25% downfall, guys, in the June 11th to 5th August. July 11th to 5th August, almost within a month, it has lost all the gains which has done in the last 1 year. So let us quickly, go through this article, and quickly we have already discussed in the morning as well. What are the five reasons we discussed already, guys? As you all know, that recession fear is there in the U.S. market. US regarding US job data, US experienced a massive hiring slowdown in July, adding 1,14,000 jobs compared to the 2,15,000 jobs in the month average of the last year. So last year month average it was 2,15,000, but this in the July month it was just 1,14,000 jobs, guys. So that is almost additionally unemployment has jumped around 4.3%, the highest since ever October 2021. From October 2021, this is the highest unemployment percentage, 4.3% it has hiked. So this is causing the reason for the recession fear in the US market. So that is first reason. The second reason, we will get to know the US market are not the only ones in the slump. Japan's Nikkei 225 225 is also struggling since the Bank of Japan has raised its benchmark interest rate on Wednesday. The hike pushed the value of the Japanese yen higher against the US dollar. As a result, low interest rate, the Japanese yen was used for the forex strategy called carry trade. So this is entitled borrowing in the yen and investing in the higher yield assets. However, with the BOJ raising interest rate, this might cause a lot of pain for the forex trade, employing the strategy causing further disturbance in the global market. So guys, carry trade is a concept. Okay, so earlier in the Japan, it was just 0.1% of interest rate it was there. So what usually people used to do is they used to borrow the money from the hen, and they used to invest in the other good higher yield assets. So anyway, their interest rates are very less, right? So they used to borrow the money and they used to invest in the higher yield assets qualities, and they used to make the returns and they used to pay back. So this was the thing which was done earlier. So as of now, the Japan has hiked the interest rate, right? Since the Bank of Japan raised its benchmark interest rate on Wednesday, so they also have to be in, interest rates has been hiked to 0.25%. So that is the reason. So anyway, whatever the cost, whatever they were borrowing, right? So for that, they have increased the interest rates. So while paying back, these guys have to pay that much interest rate. So that is the reason the Japanese yen higher against the US dollar. So this is for the concept of carry trading. So this because of the interest rate, so they started selling off. There is a heavy pressure in selling off in the tech stock in the US, and they started paying back. So this is one more reason. The second reason is Iran-Israel tensions. So Middle East tensions we have already discussed the geopolitical tensions. Because of that, it is heating up the this is also one more reason, added reason for the today crash as well. There the situations are heated up. So because of that, this is also one more reason. So then comes take it to one show. Amid poor deal environment, record heat wave and uh, lackluster demand, and the earnings growth for the quarter ended June has been weak, falling around 2% on year, according to the Motilal Oswal. For the 30 Nifty 50 companies that have reported their earnings so far, there is a 0.7% year-on-year growth, but 9.4% QoQ decline in the net profit. The aggregated performance was hit by a sharp drag from global commodities. Heavyweights such as HDFC, Tata Motors, ICICI Bank, Maruti Suzuki, and TCS driving the aggregate. However, growth has primarily been led by the BSFI and auto sectors. So basically the thing is quarter on quarter decline is there when it comes to the earnings. So this is also one more reason, and there is an absence in the new fresh good triggers for the market. So that is also one more reason. So all these five reasons caused today market crash. So one is the year the major reason is recession fear, and the Japan bank in hiking the interest rate. So these are the two main reasons which have crashed our Indian market, guys. So the thing is we don't know, nobody knows when it is going to take the reversal from this crash. Obviously nobody knows it. So the thing is what we have to do is we don't have to we just we have to wait and watch policy is the best policy right now. Just wait until we see the clarity of the reversal signal in the market. So by till that time, you can, if you have any cash, keep it with the cash. Once we saw the clear signal of reversal, then definitely we can start investing from there. So don't start buying here only. We don't know where is the end for this. So from there, when we take the reversal from there, even if you buy at the 5 or 10% higher level, it is fine, guys. That's all, guys. This is what we have been, like, I have been thinking. That is what the amalgamation that I want to put it in front of you, to clear the doubts, or to clear any concerns which you have. If you have, still you have any concern, please mention in the comments. I'll try to, I would be very happy to address those concerns, guys. Thank you so watching my video. Please hit the like button and share and subscribe to my channel, guys, so it will motivate me to come up with such interesting content for you guys in the future and each and every day. So I'll try to review the stock analysis and the quarterly results today. I'll come back with another video, guys. Thank you so very much, guys.